Welcome, Clay, to the Modern Money podcast. We spotlight people and ideas transforming the world in decentralized finance. Obviously, Clay and I got to know each other over the past 1 year as he was raising a fund at Colosseum, of which we participated and invested. Clay has had a fascinating career in crypto and even before crypto. And when I was thinking about some of our initial guests here, obviously, Clay's name was at the top of the list. So I'm really excited. I wanted to explore Clay's journey today, both as an operator and investor, and figure out, what they're up to at Colosseum, and also maybe get some hot takes on the trends and opportunities in the ecosystem. Welcome to the show, Clay.
Thank you. Excited to be here.
I wanted to kind of get started just to get a bit more into your background and how it has evolved over the years, and maybe starting from your time at Square and so on. But I think it would be a really good table setting to understand kind of your crypto journey as well and what led you to Colosseum.
Sure. So as you mentioned, my background starts at Square, where I started just building traditional payments products for about 4 years at the company. Even when I was there, the company had sort of crypto in its DNA already. It was one of the first companies in the world to connect Bitcoin-based payments to their e-commerce platform. That was back in 2013, 2014. And so I was sort of indoctrinated into it early on during my tenure there, which was helped along by a guy named Matty Taylor, who actually went on to be my co-founder at Colosseum a decade later. And so that's sort of where we got started. But building traditional payment systems, I think you start to see the merits that come with infrastructure like Bitcoin in terms of the simplicity. And so as a result, really was keen to go work in the ecosystem full time. And so decided to leave and join a small startup called 0x Labs, which back in the day was building one of the first pieces of decentralized exchange infrastructure in the Ethereum ecosystem. But all the while I was there, I was very active as an angel investor, advisor to a few companies, and so wanted to try my hand full time at investing, and so decided to join the team at Slow Ventures to help lead all of their early stage investing, seed stage investing in crypto, alongside partner there, Sam Lesson. And while I was there, interestingly enough, they were one of the first investors in Solana, and so had sort of a front seat to the emergence of that ecosystem. And one of the key things that helped to grow that ecosystem was an initiative that my friend back from Square and 0x Matty had started at Solana Labs, which was these online hackathons, which were this great coordinating mechanism for net new developers into the ecosystem. And as time passed for about 2 or 3 years, what I saw was it was an incredible crucible for company formation. And so that's what was sort of the impetus that allowed Maddie and I and Nate, our third co-founder, to decide to actually roll this out and build Colosseum in earnest as an accelerator that sort of uses these online hackathons as the primary mechanism for sourcing talent and funding it.
Interesting. Can you touch on how your decision matrix evolved, going from an operator to an investor and then eventually branching out from Slow and really taking the leap, because raising a fund is hard?
Yeah, I mean, I think when we started raising for Colosseum, Sol was at whatever, $13. And so it's better to be lucky than good in terms of market timing. But I think that we were extremely convicted in sort of the underlying merits of the strategy and what we were raising for. But I think that the push sort of came from a couple of things. Like, it's like going from being the player to being the coach in terms of executing the day-to-day strategy versus not. And I think what I've convinced myself is actually those two things aren't mutually exclusive, at least insofar as the product that we've built, because we have this sort of first-party platform that we've built that has over 30,000 developers globally that we coordinate into these events, 6-week events, 2 to 3 times a year. And so we actually treat that as a product and, has some crypto-specific elements to it. And so I still get to play the role of operator in terms of day-to-day around Colosseum specifically. But then obviously we run an accelerator where we kind of view ourselves as the first hire to 2 founders that we support. And they basically give us the job of helping to fill gaps that they can't themselves, because, usually it's 1 or 2 folks with an idea, and obviously many hands make light work. And so, I think relative to certain genres of investing where it's far more passive, I do think that we have an awesome seat and set of opinions and pieces of expertise that we can bring to the table as investors, but obviously operators in terms of our background.
So maybe for folks that don't know, we kind of just launched into the discussion, but maybe give us a sense of Colosseum. And I'm more curious about also how you've thought about it as a product, right? When you think about a fund, but also thinking about it from a product perspective, and what led you to, when you had to land that anchor check or build up towards the $60 million fund, what were some things that you felt really resonated? Take us through the arc of that as well as you built Colosseum.
Sure. Yeah. So big picture, Colosseum is both a platform and an accelerator that enables anyone anywhere in the world with an internet connection and an idea to come and build that idea on chain. And the way that we do this is we have a first-party platform that, again, allows us to host these large global online hackathons, which are effectively like a 6-week engineering sprint to go build a very flimsy version of a product that sort of gives you confidence in terms of whether this product hypothesis that you came to the event with can be proven or disproven, and compete globally against all of the different product ideas that folks come with at each of these events. And so that is very much a public good. There's non-dilutive prize funding that we offer to folks that compete across the different categories in the events. But it's also an incredible crucible of innovation and coordination of talent, where in order to go win one of these, you have to be extremely technical, which I think by default, any product in crypto has that bend towards it. But you also have to be competitive. I think there are a number of founders that sort of take the position of, I'm going to closely guard this secret, I'm going to build in stealth, et cetera, et cetera. But it takes a certain type of individual to go and compete against tens of thousands of others submitting the best ideas and using that as sort of the refinement mechanism. There's the common phrase of iron sharpening iron. And so I do think that these events are an incredible mechanism for enabling that. It also, as an accelerator, makes it really, really easy for us to sort of separate the types of founder talent that we want to underwrite, because you have to submit a GitHub repo, you have to put together a presentation. There's all these different components that give us an incredible way to evaluate founder talent and team talent based on the ideas that they submit. And so when we go out to fundraise, I think that there's this common question of like, what makes you guys different? And oftentimes it's sort of background and what people have done before. Obviously, that was a key component for us. But I do think when you look at where the world of venture and crypto specifically is going, it's sort of bifurcated between what I would call sort of like the aggregators. And those are very much sort of the growth stage, very durable multi-stage capital that has $1 billion plus under management. And anything that gets sort of consensus escape velocity in crypto obviously has a home there. But then there's these smaller specialized approaches that I think is great from a founder perspective, because you have this diversity or almost like a la carte menu of types of capital that you can choose from. And so for us, the key things that differentiate us are, one, we're very focused on the Solana ecosystem. We've sort of built our accelerator, mentor network, et cetera, on that in close partnership with the Solana Foundation. And second, from sort of a differentiation perspective beyond that, is that the hackathons are much different than the typical accelerator model, where in the existing accelerator model, take YC or name your favorite one, for example, it's effectively a college essay that you write, and you say, hey, I'm so-and-so, I have these ideas and these credentials, and I'm willing to fly to Silicon Valley to come work in person with folks day to day. And by default, I think that does a couple things. One, it leads to some bias in terms of the opportunity set for folks to access that type of program. And two is you don't necessarily have to prove anything in terms of either the interview or what you write. You could obviously make up an entire product idea, right, and submit it, and prospectively could be admitted. And so for us, we've sort of taken the opposite perspective, which is like anyone with an internet connection globally across all of the different countries that exist in the world, because there's many talented folks externally, and then go and build something for 6 weeks. And if that has merit, capacity, and does well against thousands of others, it's probably a great team to underwrite into a fund. And so I think the combination of sort of this specific ecosystem focus and advantage that we had there, plus the events themselves and how they are a filtering mechanism, are probably the two things that resonated most.
How do you find these teams? I mean, the numbers are pretty staggering in terms of the number of teams you process every year.
Yeah, so a lot of it is we have great partners in the Solana Foundation, in a group called Super Team that runs operations locally in different geographies that are sort of this coordinating apparatus beyond Colosseum's platform around these specific hackathons, which again occur 2 to 3 times a year and are all online. So that's sort of the top of the funnel. And then within the platform itself, we actually have the ability to create a profile where you share who you are, what you're about, your background, different skill sets that you might have from a developer perspective or non-technical perspective. And then we also have a co-founder matching and direct messaging component to the platform that allows people that maybe have the idea, but not necessarily the core nucleus of the team that you need or skill sets you need to build a particular product, to find those folks. So it's actually a talent portal as well. And for us, the way that we go through the process of selection is the three of us in the Colosseum team obviously review every single submission by hand, which is comprised of a GitHub repo, a 3-minute pitch video, and a few other pieces of supporting documentation. And that is sort of the core of what's evaluated for the Accelerator. But we also have a panel of around 50 judges that represent other operators, founders, investors in the ecosystem that also lend a perspective. And that determines the 40 or so teams that win one of 5 sort of category prizes. So we have prizes from categories like DeFi to payments to gaming, et cetera. And then within that subset, we take 10 to 15 teams per event and bring them into the Accelerator. And that's largely based on the original submission, the judges' feedback, but also an interview that we conduct with every team that is part of that short list that we evaluate.
What's the rough numbers around the funnel in terms of how many apps you get versus how many you take? It sounds like you work with 15 teams at the end of the day?
Yeah, at the end of the day, it's 15 teams. But if you start at the top, we have a little over 30,000 developers registered on the platform. Each event, we see just north of 10,000 participants total, and that nets to around 1,500 or so submissions, which then gets distilled down to 15 or so that we extend an invite to. So in terms of acceptance rate, it's actually quite low in the grand scheme of things, and so it does take a lot of refinement. And we also lean on the platform a lot as sort of a point of leverage for us to use to evaluate teams efficiently.
That's incredible.
Yeah.
What happens once they join your Accelerator? What kind of support resources does Colosseum provide? I'm assuming there's an investment check as well with it.
Yeah, so we invest a standard sort of YC type deal. We invest $250K for 7% of the company with a token warrant component as well too, because as an investor in crypto, you need that holistic exposure, just given the history of how value can accrue there. And in terms of the design, we think of the Accelerator as occurring in 2 key components. The first is obviously the hackathon, which is 6 weeks long, and then we have an 8-week long Accelerator where I think the way that we differentiate ourselves is, again, we think of ourselves as the first hire to these founders. And then we've built a network of 40 or so mentors from up and down the stack in terms of skill sets and jobs, importantly, that they can do on behalf of founders. So whether it is things like audits and evaluation of program or smart contract code before it goes into mainnet, obviously, that is an incredible help in terms of de-risking an individual team's product before they go to mainnet, all the way through to things like fundraising, where we provide a bit of dilutive capital, but before an individual team goes out to raise a big slug of dilutive capital, we can help to narrow down, 1, the fundraising narrative, but 2, importantly, refine the product hypothesis to be as sort of provable or disprovable as possible before they actually go and raise around a particular product idea. And so I think those are the 2 key components in terms of support that we can provide. But the most important thing is get embedded in the ecosystem as efficiently as possible and get to mainnet or some semblance of product market fit as soon as possible and get the capital and resources around you to be able to do that.
And as you were iterating on Colosseum, the product, right? What were some of the iterations / aha moments you had as you were running multiple cohorts over the past 1 year?
Yeah, I think that there's a lot more that we want to have natively embedded in the platform, and we've just been adding that as we've gone along. That's everything from the basic blocking and tackling around company building, where we've built offers and discounts and relationships with different service providers, whether it's like RPC operators, on-ramps, or legal services, banking, et cetera, so that, when you're standing up a company, that's immediately accessible sort of in the Accelerator portion of the app. And then more broadly within the hackathon platform itself, it's really around like team formation and ensuring that when you submit, it's as complete a view of your product as possible. So we've revised things like the submission flow to make it much, much easier for teams to sort of templatize that submission such that file doesn't get corrupted, or things that can fall off do so. And then obviously the facilitation of connections. I think direct messaging was one of the first features that we built, and we've seen just a massive amount of engagement there in terms of teammates finding each other for the first time on Colosseum for a hackathon and and being able to coordinate from Bhutan and Singapore and Austin, Texas to build a product for one of the events. And so I think that fostering of connections is probably one of the most important components, because that leads to more holistic experimentation from a team perspective and ultimately better products and companies getting built.
Have you seen a lot of co-founder matching on your platform where individual developers come in with maybe a concept but find the right people as well?
Yeah, I mean, it's one of those things where you build this feature and you think like, oh, I hope someone uses it. And then you actually see them do the thing. And it's really cool to see. In the submissions themselves, people will call out, hey, we met on the Colosseum platform. And there is kind of similar to what you see in other accelerators that have other co-founder matching or interview platforms. It's really helpful. But I think the thing that we do that goes a step further is we throw them immediately into the fire in terms of building a product and having to ship it, which the college style essay version of this doesn't necessarily do. And so you get people that come in, build a couple things, get excited to work together, and they now have this sort of shared experience through that, or it's their first time kind of going through an engineering sprint together. And so for me, it's one of the cooler things that we've seen emerge, aside from the random things that come out of corners of the internet and the world that you would never expect. But yeah.
Yeah, and for developers that are out there listening, what are some of the things that are exciting for you in terms of where we find ourselves in late 2024, going into a new administration next year, with coin at all-time highs and Solana doing really well? What's in scope for developers that have ideas here?
There's still so much that needs to be built. It's hard to start in one place, but the way that we've defined the events, we have these broad but somewhat prescriptive categories that I mentioned before that folks can build towards. But I think thematically, we're in the 8th inning of sort of the infrastructure layer, where there's a couple of key pieces in Solana specifically, but app support more broadly that need to be built, that we have an infrastructure track that looks to facilitate that. And then we are of the opinion that we are on the dawn of the app era in crypto broadly, whether it's payments, gaming, all sorts of weird social experiments. And so for us, that's the main thing we want to see, is real use of the underlying infrastructure to support scaled applications that have millions of users. And so we have a bunch of categories that we support there and have obviously funded through the first few cohorts that we've run.
So bearish net new infra, bullish consumer apps. Yeah. I mean,
if we want to put it on a hot take, infrastructure for infrastructure's sake is like the trade that's so incredibly overcrowded in crypto broadly, and is, I think, supported a lot of crypto navel gazing in terms of marginal gains, but a token is attached, so therefore we should support it. And so, yeah, we're pretty practical in terms of, we think applications are the thing that will drive long-term value in terms of demand for the underlying block space, which, like, we have this massive highway that can run at 1,000,000 miles an hour in terms of throughput, and at least in the context of Solana. And so we need to build those apps that go to support it. And I think we're starting to see it. If you look at the scale of things like stablecoins and their growth separate and apart from speculation, that's where real demand can come from for support for dollars underlying those crypto native instantiations of them, but also just in different markets having access to dollars just as a baseline point of storing value or facilitating commerce is something that will have incredible scale hopefully here soon.
Yeah, and what's so fascinating about the Solana ecosystem is the types of developers is attracting. And any thoughts there in terms of what type of developer profiles have you seen across what geographies? How many of them are first-time crypto builders versus moving in from other ecosystems, etc.?
Yeah, I mean, I'd say the participation in terms of the platform and the event covers the entire spectrum. You can't call out an average Colosseum developer. I would say that from a geographic perspective, it's largely stack ranked based on where population coalesces. So India, China, and then sort of the long tail of geographies beyond that, with pockets in certain places that have, a penchant for fostering highly technical talent. But then one of the things that I hope we start to see, especially in the US, is an emergence of interest and experimentation from the talent hubs that exist within that geography as well. I think today the stat's been called out that there's 78% of developers that build on-chain sit globally, which I think is sort of a sign of the chilling effect that the regulatory environment has had on developers in the US specifically. And so I hope that that's a trend that starts to emerge, just because it's missing a big part of the opportunity in one of the largest capital markets in the world. And so those are some of the key components in terms of geography and trends that I hope to see. As price appreciates, obviously you see people coming from adjacent ecosystems that are more willing to take a flyer on quitting their full-time job to build something on-chain. But what we've seen in terms of the types of founder profiles that we've underwritten into the Accelerator and sort of helped come to market, they're often multi-time hackathon participants in terms of they often have come to one hackathon with a particular idea, built it, didn't win anything, and we're like, oh, okay, let's refactor it, but with the same core team. And that type of willingness to come back and compete multiple times is sort of a great signal in terms of their enduring commitment to it and their journey sort of becoming further and further down the proverbial rabbit hole as a crypto native developer.
And obviously, the Bridge acquisition has generated a lot of interest in stablecoins in general, and a bunch of companies launching stablecoins, reputed names, right? We're probably going to get some more regulatory clarity. How does the stablecoin thesis intersect with the Solana thesis, and what's the role that Colosseum plays there?
Yeah, from a personal perspective, this kind of gets back to the original use case that I saw sitting in the seat at Square, which is like more efficient payment systems that aren't reliant on like 1970s era technology. And so that's one thing that I'm excited about, and sort of the disintermediation of the glorified toll booths that kind of exist in that traditional stack and the effect that it has on small businesses. But I think more broadly for us, it is programmable money that anyone in the world can build an application around. And so for us, we're seeing implementations like there's a company, Ripe Money, we haven't invested, but they're building a layer on top of the QR-based payments in the Philippines where remittances in USD come from the US back into the Philippines. People can use that to facilitate commerce at points of sale in brick and mortar locations or via e-commerce platforms through the Ripe app in a wallet that's self-custodied, and all of that's done via stables. And so these types of things that facilitate commerce in a much lower cost and efficient way on a global scale that we haven't seen before is probably the most important thing. And then maybe a second thing that I would add is market expansion. One of the things that's really difficult as a traditional fintech, whether it's US, UK, or otherwise based, is to build a global business. You need to go out and get all of the requisite licenses and integrations with the different rails that exist in particular markets. But with stablecoins, it's sort of a shortcut to market expansion, where if you're Venmo or Cash App or whatever it is in terms of a P2P payments app, you can turn on USDC or USDT or whatever your favorite version of this is, and go into markets that you haven't been able to access before tomorrow, which I think is an incredible innovation in terms of enabling best-in-class products to access greater markets. And will be one of these things where, like, if you think of FinTech 1.0 as a shiny coat of paint on really shitty legacy infrastructure, stablecoins are the evolution to FinTech 2.0 that actually is on top of better, more performant, lower cost infrastructure that can scale globally.
In your book, what is one thing that most people don't understand fully or hasn't permeated fully in the consciousness in terms of stablecoins or use cases? What's the most misunderstood concept, do you think?
I don't know how non-consensus this is, but at least in crypto native circles, there's been this long-term drumbeat of like, oh, I need to hold, like, emerging markets are going to want to hold Bitcoin because Bitcoin is going to be this reserve currency for the world that isn't subject to inflation and all of the shenanigans that go on in terms of the monetary supply of these different currencies. But the fact of the matter is, I think in the short term, stablecoins have perfect product market fit because everyone wants to hold dollars, and because dollars are reasonably stable, at least as far as it, when compared to any other emerging currency. And I think importantly for the US, it's a national security technology. Like, if you want dollar hegemony to remain, you should be in support of stablecoins and their growth and proliferation across the world, both as a means for facilitating commerce, but also enabling folks in different geographies to hedge against the inherent volatility that comes from their local geography. And so I don't necessarily think that's understood in a bipartisan capacity. And I think that as technologists, we obviously see this, but it's our job to go and educate those that are in positions to foster thoughtful regulation around these types of technologies to actually realize their potential.
Obviously, Solana is key to what you guys do, and I was really excited about this conversation. I think you'd be a perfect person to kind of give your perspective on what's next for Solana. a lot of the common questions are other ecosystems going to come back, or is Solana's dominance going to continue? But what excites you about Solana? Obviously, you've definitely hitched your wagon on the Solana ecosystem. How do you think about it going into 2025?
Yeah, I draft off of the perspectives in aggregate of developers globally. Like that's sort of how I've built my perspective over time. And also my lived experience between different ecosystems, right? I started my career, at least in crypto, in the Ethereum ecosystem and building products there and seeing some of the limitations. And so what I see in the world today is we're sort of at the on-prem versus cloud transition of crypto, where in places like the Ethereum ecosystem, you have this myriad of L2s that are effectively like on-prem databases, because you have to find the server rack and put it in the location. You have to hire the guy to watch it to make sure no one spills coffee on it and all the different customizations that go along with it. Versus with Solana, from a global developer perspective, it's like abstracting a lot of the on-chain components to the cloud, where it's a monolithic structure that just works and is low cost. And so if you're an application builder, you don't necessarily want to have to concern yourself with the back end as much in terms of having to build just an application that works, which is hard enough in and of itself. And so that's the main difference that I see today. How that progresses is, look, there's an incredible research apparatus that exists in the EVM ecosystem. There's obviously other alt L1s and L2s and network extensions that are all vying for this general purpose place. Today, in terms of where you can facilitate scaled experimentation, like the data doesn't lie. In terms of net new developer inflows, Solana from the Electric Capital report is number one for 2024. And I don't see that changing as we get into the next year. And I think that we play a huge role in facilitating that.
What's your take on the whole meme coin meta? And I've heard some very rational explanations, and I've heard some fairly, I would say bullish explanations as well. What's your take on the whole meme coin meta?
I mean, look, it's fun. And if you want like the full financial nihilism, cultural capital overview, you should have Maddie on. I think mine's a little bit more sober, which is it's a lot of fun and it's interesting, and these things as like proxies for what's happening in sort of internet native cultures is really fun to watch. But I think the more important component of it is that it shows the possibility of scalable infrastructure in terms of how, if you get something like a stablecoin based payment system that has mass market appeal tomorrow, you can on-ramp millions of users and the chain will continue to perform and transaction costs won't increase. And so as with the internet and sort of anything open source, you're going to get a bunch of really fun experimentation. But I don't necessarily think that that's the end state for the Solana ecosystem. At least, certainly I hope not, because I think he wants Solana to be equivalent to NYSE, which has all these different diversified assets that you could access in a low cost and performant way. And I think we are in inning one in terms of those types of assets being issued on chain in a way that you or I can go with our wallet and build like a diversified portfolio that when correlation goes to one, everything doesn't go to zero. And so I think that that's the hope for the future, is that you start to get this sort of slow tick, tick, tick of novel and traditional assets that are accessible via wallets on Solana.
Interesting. And what's your take on the AI meme coin meta?
I mean, look, everyone thinks that there is this like agentic future where the application layer is going to dissolve. And if you listen to Sam Altman and Satya and all these folks who are obviously in their own right are quite smart, there is a bull case to be made. I think I'm a little bit more sober in terms of doing things on chain in an autonomous way is great in the abstract, but I think that there's going to be a whole host of issues that you have to run through, whether it's payment specific things like agents going rogue and doing things on behalf of consumers in the US or otherwise that you wouldn't want them to do, that you have to work through as an ecosystem before you see these things thrive in earnest. Obviously, we would love to facilitate this experimentation via the hackathons, and I stand to be proven wrong in terms of the future being much, much sooner than we anticipate. But for now, having AI16Z build a portfolio of meme coins on behalf of you is great in a bull market. We'll see how it does if things tick the other way, because I think that it'll struggle. And also too, like if the end state of this is something equivalent to an agent version of Wealthfront that builds some diversified portfolio for you, you still need those assets to exist on chain and be accessible in the same low cost way in order for that vision to be realized. And I still think we're a ways away from that.
That's a really good point. So as you think about the framing dreaming of the bull market, and especially founders that are early probably think bull markets exist forever. What are you telling your teams in terms of, we've seen this before. Where are we in the bull market cycle? How do you think about 25, 26? And if you were a developer, what are some of the things they should be keeping in mind, building towards, etc., factoring in some of the macro cycles?
Yeah, I mean, I think big picture, we look to underwrite teams that are building products that can exist across market cycles, because they'll be sort of essential pieces of infrastructure applications that drive demand for users. Obviously, there will be some oscillation with market trends, but from a company building perspective, and again, you can throw a rock and hit 10 VCs that have 10 different opinions on this. I think mine is one around capital efficiency, where we provide sort of this initial set of dilutive capital to say like, hey, what's the product hypothesis? And if that's proven true, yes, go raise enough to have like 24 to 36 months of runway, but don't go for the giga round at the giga valuation, because that leads to just a ton of baggage and burden if the market turns against you, right? You want to have the right amount of capital to run the experiments that prove or disprove the hypothesis, but you don't want to over raise to where you can get undisciplined and then you're running 10 experiments at once and you're not really learning anything from any of them. And then, all of a sudden you're at like 2 months of runway and you have to go raise again at a down round that's incredibly punitive in terms of dilution. So I think the thing to us is like, we advise folks that capital efficiency is a superpower. Don't fall prey to the headline grabbing, people telling you you're the prettiest girl at the dance version of venture capital that leads to a horrible hangover if the market starts to turn against you.
And you touched on this earlier. Maybe touch on a little bit more on your relationships with strategics and how they come into the mix when you work with these teams, and selfishly, how MoonPay could potentially play a role there.
Yeah, I think I made the original point around anyone that you bring on the cap table, especially in the first, call it 2 rounds, your angel and then your pre-seed round, they should be people that you can give a specific job to. And that's individual operators and angels that may help with distribution, channel partnerships, audits, etc., but also extends to service providers that can help build a holistic product end to end. And one of those key pieces, right, in terms of like, as much as I would love for the world to grow up, natively, and we're all going to whatever, Times Square to exchange Bitcoin back and forth, and that's everyone's local on-ramp, that's not the case. Like plugging in traditional payment systems from a global perspective, on-ramps are obviously a huge component to that, to getting net new users in the door. And MoonPay obviously plays a huge role in that and facilitating that access to as many users as possible, and improves the time it takes for applications to find product market fit. Because if users can get funds in and do the thing that they want to on chain in a low cost and efficient way, that's the role that they play.
Yeah, and that was our thesis as well in figuring out a way to work with you guys, because we want our product stack to be pushed by your use cases, and you guys are very much at the tip of the spear, if I may, on the Solana ecosystem. How do you think about 2025 coming? What are some of the highlights from a Colosseum perspective that you're looking to do over the next 1 year? What are some potential wins that you have in the bag?
Yeah, I mean, I think Solana has the world's attention now, so that as sort of a macro trend is really exciting for us in terms of the types of profiles that we think are going to show up to the 2 to 3 hackathons that will run over the coming year. The less interesting answer is we kind of operate on this sort of metronome cadence of we run these events, we run the Accelerator, and everything facilitates through that. The variability is sort of how different teams that come through find product market fit and on what time horizon. And so, we've seen a ton of really interesting out there and weird experimentation in terms of companies like MetaDAO that are building a new version of a governance platform that's governed by futarchy or prediction markets, which I think will be incredible in terms of the savings and individual treasuries and DAOs not shooting themselves in the foot in terms of gross waste of allocation of funds, and doing so in a really market-driven way, which I think has a ton of merit, all the way through to gaming and user applications, where there's a group that's in our next cohort called Alpha FC that is building a new layer on top of sports team ownership and actually acquiring a few different sports properties and then allowing ownership to be distributed on chain, which again, in terms of bringing net new assets that are totally uncorrelated from sort of meme coins or what have you, that's an interesting experiment. And so for us, it's just like experimentation at scale across a diverse set of categories, and inevitably something cool is going to come out of it, which is the fun part.
Yeah, I for one can't wait, Clay, and I appreciate you taking the time with us today, but I think we are just poised for a really incredible 25, given, to your point, there's a lot of infra that you're in the later innings for, and I'm excited to see what applications get built, and obviously work even closer with Colosseum to partner up with some of these companies that you guys are working with.
Agreed. No, excited to work with you guys, and thanks for giving me the chance to share more.
Today's episode of Modern Money is hosted by Abhay Mavalankar. This episode was researched and produced by Audrey Saccone and edited by Edgar Leal with production support from Gabby Trujillo and the team at Trolley. If you enjoyed this episode, don't forget to rate and subscribe to Modern Money on Spotify, Apple, or wherever you listen to your podcasts. And be sure to follow us on social media at MoonPay and at Modern Money Podcast. Thanks for tuning in, and we'll see you next time as we continue our conversations here on Modern Money.